Joining me now is Dino Kronfol, Managing Director of Alegra Capital. Dino, welcome.
Thank you very much. It's good to be here.
Thank you. How is the global financial crisis affecting the Islamic finance industry?
Broadly speaking, it's affecting it tremendously. At the end of the day, the sukuk market and financial markets rely on pricing, rely on demand, and are affected in every really aspect by what's happening in the conventional space. With credit markets globally effectively not functioning properly and more or less shut down, I would say that it's only normal to see the effect to be direct and significant on Islamic financial products and sukuk issuance in particular.
Specifically, what are we seeing?
We've seen a significant slowdown in the pace of issuance. We've also seen a change in the type of issuance that we see. That is, if you look at the second half of 2008 and the beginning of this year, it's predominantly been in local currency, and that's really because the international markets are not really accepting or are not really functioning at the primary market level. So that makes any potential new issuance that much more difficult to place. In addition to that, I would say the CDS market, to a certain extent when it comes to Middle Eastern names and Southeast Asian names, they've also lost, I think, some of the characteristics of price discovery. And so they become actually trading on technical factors rather than just fundamentals, which leads to exorbitant, if you want, credit spreads associated with issuers that would want to come to the market, thereby making it prohibitively expensive for these potential sukuk issuers to come to the market in this environment. So we are basically in an environment right now where we expect the different governments that are involved in the Islamic space or that have aspirations to be involved in the financial space or have active, if you want, in Islamic financial markets to play an increasingly more relevant role in making sure that the financial markets and their jurisdictions are functioning a little bit better, that liquidity is provided, and that confidence in different shapes and form are restored. So really we are in a very difficult situation, I would say.
What would you like governments to be doing? Because they've already put through a number of policy measures to try and boost liquidity in the region. What more is needed?
Well, absolutely, and we actually commend them on the efforts that they've done. And I think it's actually quite impressive that, given the infrastructure that they have, that they've been able to accomplish so much in the space of 4 months. There is more that can be done, I think, and there are additional tools that can be done to provide liquidity, and as well as develop a more a sounder, if you want, financial market, especially with respect to credit. The Achilles heel of the GCC economies in particular and the rest of the Arab world is that they have relied extensively on external funding, and once that disappeared, it created a serious liquidity problem. And so although they've taken a series of measures, more needs to be done to provide liquidity, especially to non-government related entities. So whereas, for example, the decision to help out by the UAE Central Bank, for example, most recently to help out Dubai, is a very welcome development that addresses short-term market concerns. But over the medium to long term, you need to actually work much more diligently to create these domestic money and bond markets. And so that includes laying the regulations, the legislation, issuing the paper, developing a more transparent and open communication channel with the financial markets.
So one of the things you mentioned was an increase in local issuance. To what extent the region locally has the capacity to be able to take on the issuance?
Well, this is the thing. Even if they were to issue, you still have to deal with the other factors that the financial markets in the region, and all of these are still fairly young and developing, and essentially their financial markets constitute only commercial banks. So you have very little depth in these financial markets because the commercial banks clearly are having these liquidity constraints. So what should be at the top of the agendas of policymakers is to create these domestic asset pools. And so there's plenty of room to regulate insurance companies, pension funds, even sovereign wealth funds that invest within the region, as well as support local asset management. I mean, all of these different elements will help create domestic asset pools that can ultimately buy paper that needs to be issued. And if you look at the slowdown in issuance, you notice that it was much more pronounced in the GCC, even though the GCC, from a macro point of view, has a lot more reserves, is stronger, has high investment sovereign grade ratings. But you notice that it's countries like Egypt, Indonesia, Malaysia that were able to continue to roll over and issue paper in local currencies, just because from an infrastructure point of view, their money and bond markets are more developed.
How is your Sukuk fund faring?
It's doing fine. Clearly, you have to look at it from a relative point of view. From an absolute return point of view, we're down to the tune of about 18% over the past 6 months. This is very much in line with the market, although I would say that we have our investment process is very much bottom up, and so many of our positions are actually off benchmark. If you want to look at, for example, the HSBC benchmark they have for the Middle East region. Having said that, we also feel that the opportunities are tremendous right now in the region, and I think the positions that we have will ultimately do very well because we just don't see the hard landing, the extreme hard landing and default type scenarios that have been priced into these markets. So we feel much more comfortable with the credits that we hold.
Do you buy and hold typically?
Well, we have medium to long-term views. I mean, the market, because of the liquidity that it has, doesn't really allow for a very active trading strategy. And furthermore, our investment process is really tailored for these markets. Again, we specialize in the MENA region, and so we know these markets very well. Therefore, our investment process is a reflection of that market reality. So what you need to do is take medium to long-term views in this environment. You can't really actively trade and change your mind in this environment. And we feel very confident that the same way we were vindicated with the Dubai call, we think there is going to be further developments that will ultimately lead to very good risk-adjusted returns for our investors. I don't see the default scenarios that are priced into the market. I don't think the CDS market is a reflection of the credit fundamentals in the region, and I think ultimately the companies and the credit that we hold are a very good investment, especially when you compare them to equities in the region, as well as to global peers. I mean, they're trading at a discount to global peers.